Okay, the webinar has started. Welcome, everyone. We're going to let everybody file in, give you a couple of minutes, and then we'll get things going. This is the Group Dentistry Now DSO Study Club webinar series. We have our 2026 Emerging Dental Groups to Watch winners with us, and be a great conversation that we're going to have for the next hour. We had a bunch of questions that came in from registrants. So we appreciate everybody asking those questions. We'll try to get to every one of those. If we can't, you'll have an opportunity to actually hear more from the Emerging Dental Groups to Watch winners in Chicago at the ADSO Summit, which is coming up. That is June 15th through the 18th at the Hyatt Regency, and we're going to be giving out the awards and then also doing a 1 hour panel discussion there with some different questions. And you get a chance to meet the Emerging Dental Groups to Watch award winners. If you happen to have any questions that come to mind during this conversation, feel free to just ask a question. We will try and get to it live. And if not, we can try and follow up later. But if you're anonymous, we can't. So you can be anonymous, but then we can't follow up. So it's totally up to you. This is being recorded. The webinar should be up on the groupdentistrynow.com website and our YouTube channel. Probably have that up early AM tomorrow. We may get to it this evening, but it just depends on how fast Zoom processes this. I'd like to also thank Henry Schein One for sponsoring this webinar. We're going to run a 1 minute commercial of theirs, and then we'll get into the conversation. Let me give everybody 1 more minute to file in, and then we'll get going. Give you 3 minutes, so we got one more. Like I said, this will run 1 hour, so at 4 o'clock Eastern, we'll finish everything up, and then the recording will be available. All right. I'm going to, again, thanks to Henry Schein One. I'm going to run just a 1 minute commercial of theirs. We really appreciate them. And then we will get into the introductions and the Q&A.
When your systems work smarter, you do too. Technology should make your practice run faster, not slow you down. Juggling multiple platforms and re-entering the same data isn't just frustrating, it's risky. Disconnected systems cost time, straining your team with avoidable inefficiencies, allow errors leading to denials, rejections, and delay payments. There is a better way. Capture decoding in seconds. Clarity at every step. The information is right where you need it. From booking to billing, you get the full picture. Clean data, timely insights, and one source of truth, bringing confidence to every decision. One connected system powers it all. Smarter care starts here.
All right. Thank you, Henry Schein One. I saw Jeff bopping his head on that one. That was actually pretty good. I kind of like the beat to that one. So, with that, we'll get the introductions here again. These are the 2026 Emerging Dental Groups to Watch winners. We really appreciate everybody jumping on here. And so I'll go through some just intro, name, company you're with, DSO you're with, and then you can introduce yourselves a little bit about your background, your group. And then, of course, you can find out about the groups on the Emerging Dental Groups to Watch Awards. We put that out in January, so I'll put a link in the recording at least to this, so you'll be able to access that article. But start off with Blueprint Smiles. We have Dr. Dipesh Patel, founder and CEO. And we also have Dr. Jeffrey Burch, CEO, CFO, CIO, Burch Dental Partners. We have Dr. Heir. Jag is founder, CEO, and president of Mosaic Dental Collective. Dan Redifer is co-founder and CEO, Lavender Dental Group. And then we have Mark Ruggeri. He's the partner at Oakwood Dental. So I think I got all that right there. But thanks, guys, for being on. Dr. Patel, why don't we start off with you, a little bit about your background and tell us a little bit about Blueprint Smiles.
Yeah, thanks for having me. Dentist turned CEO of a dental group I started in Atlanta, Georgia. We are 8 locations, predominantly GP. We're kind of bringing in specialty now. Um, Started practicing in 2012. The group was actually formed in 2015. And we kind of focus on two things. We want to be the happiest people service organization in dentistry, is what we kind of allude to. We try to take care of our people, which take care of our patients. It's kind of opposite of what you kind of hear most groups do. They focus on the patients first, but we focus on our people that take care of the patients and even a margin. So we're not trying to be the biggest, but we do want to grow intentionally and respect our financials at the same time.
Thanks, Dr. Patel. Dr. Burch.
Hey, Bill, thanks for having me on this podcast today. And it's going to be a great show. I recognize a lot of the guys that are on here over the years, but our practice, it's Burch Dental Partners. We have 16 locations. We're mixed of perio, peds, and GP, about half perio, one peds and the rest GP. We're self-sponsored. We're bank financed. We we run at about 42 million in revenue, and basically we've been growing at about 20% since inception, back in 2008. So we've been doing this a long time, and we're very much a doctor geared company.
Thanks, Jeff. We have also Heir. He is with Mosaic Dental Collective, and you saw somebody else just jump in at the end there, Ryan Torsen, who is Jag's sidekick. Ryan, actually, he's the COO and the CMO there, but Ryan is going to jump in because Jag has to leave about 30 minutes into this. So Ryan will kind of pick up where Jag leaves off. But Jag, why don't you kick things off?
Sure. Bill, thanks for having us. I'm Heir. I'm an oral surgeon and a plastic surgeon. Started my practice from patient number 1 in 2003. So May 15th will be 20 years since I've been, or 2006, I should say. It'll be 20 years since I've been practicing. Grew the oral surgery from 1 to 4 locations, and then got this idea that, we all practice together. We don't practice in silos. So started bringing on practices, and around 2023, we were at 49 locations, brought on private equity as a partner. We're at around 60 locations currently, and had the good fortune of meeting Ryan last year and brought him on as our Chief Operating Officer and Chief Marketing Officer. We are 2/3 general dentistry, 1/3 specialty in California and Washington primarily, and focuses comprehensive care.
Thanks, Jag. Dan is co-founder and CEO of Lavender Dental, and you're in Michigan, right, Dan?
Yep, in Michigan. I'm based out of the Detroit metro area, but we're scattered around the lower part of Michigan. If anybody knows the geography, it's where most of the people are. We started our organization back in 2018, and so we have 11 offices. We're in kind of all the major metropolitan areas. We're primarily doctor ownership, so we're using bank and doctor share ownership. So our model's pretty simple. Was pretty restrictive initially, and now we've got a really good bank partner, so it's definitely elevated. We're made up of all GPs, so we have GPs placing some implants, we have some GPs doing endo, so they're doing expanded duties, and one of our core values is lifelong learners. So we promote each of our doctors to do whatever they want to do, but just continue learning, and that's actually all the employees. So even if you're front desk and you say, I want to gain some skill, part of our culture is the fact that we want you to continue to contribute until you no longer are here anymore. So people that think that way, I think, tend to be a little more proactive in situations and don't wait for someone else to make a decision.
Thanks, Dan. We have Steve Wright with us. Steve is CEO of Bright Direction Dental.
Hey, Bill, thanks for having me. Bright Direction Dental has been around since 2019. We've grown to just over 40 practices in the Midwest, so we're in 6 states. there. We're focused on building out our offices within those 6 states. We've had some nice growth, and like Dan, we're focused on education and developing our clinicians and investing in them, and in turn, they'll invest in our patients. So yeah, thanks for having us, Bill.
Thank you, Steve. Dr. Mark Ruggeri. Mark is with Oakwood Dental. Thanks for being here, Mark.
Hey guys, I'm similar to Dr. Dan there. We're just grassroots, bunch of dentists who just kept opening offices. We're up to 10 offices. We have 2 pediatric, 8 general dentistry offices, and we just grow grassroots. We follow the wagons. We started in Staten Island, New York, right outside New York City, and usually the trek is Brooklyn, Staten Island, New Jersey. So we just follow the wagons. So we started Staten Island. We have 5 in Staten Island, and then we crossed over the bridge into New Jersey, and that's where we are now with another 5, 4 GP and 1 pediatric.
Excellent. Thank you, Mark. Ryan, we already know about Mosaic, but what about you? A little bit about your background.
Sure. I'll give you the quick 1-minute overview. Been in dental for about 16 years or so. Started off initially with Great Expressions Dental Centers, back in the glory days. Always in the head of marketing role. Worked at a couple different DSOs. Like anything, the challenge is always how can we grow it, make sure we get a better patient experience, make it better for the team members as well. Then I met Dr. Heir probably 7 months ago or so. We started working together, clicked, and then, as he mentioned, he brought me over to Mosaic.
Thanks, Ryan. Well, let's kick things off with some of the questions, and we're going to mix these up with some, relatively high-level questions, and then some questions that have come in from people in the audience. So I actually this first one ties into an email I got this afternoon. Somebody was having trouble registering for the event. They have a group out on the West Coast. So they were talking about some challenges they were having in 2026. So how has 2026 started out for your practices? What does patient recall and treatment acceptance and things like that look like? Dr. Patel, why don't we start with you?
Yeah, it's for the first time since 2021, we are not averaging double-digit same-store growth. We're probably around that 8 to maybe 10% range, which we'll still take on our same-store model. We are seeing a decrease in recall and no-show. I actually looked at that data before our leadership meeting today. We are seeing less recall patients than we did at the same period of time last year. Seeing a lot more no-shows. No-show percentages higher. New patient counts down. So overall, all the metrics don't look great, but our treatment acceptance rates is still staying stable, if not slightly higher, which is kind of counteracting it. So we're still seeing an overall net growth, but not at the same pace that we saw from 2021 to 2025.
Interesting. So, like I mentioned before, we actually started to record the feedback that we had from that CEO trying to register was almost the opposite, where they actually had same amount of exams. So, but treatment acceptance was down, and that was the past couple of months. So you're almost seeing, the opposite, right? Where your treatment acceptance is up a little bit, but recall's down.
Yeah, and I think that's partially because for us in our area, we started seeing that number start to flatline a little bit in Q4 last year. So the initiative for Q1 of this year going into April and now May was you may have more time with your patients. Let's spend more time with your patients since you're not going to have as many. That should naturally lead to higher case conversion. So we kind of slowed it down to kind of speed up, and that's how we kind of counteracted it.
Excellent. Yeah. Dr. Burch.
Year's been a great start. We have buckets between organic, strategic, and acquisition growth. And the strategic growth is what we spent capital expenditures on, whether it's improving facilities or moving to larger facilities. So all of those across the board are up because of previous efforts, hiring hygiene, especially. But we are seeing in one of our newer offices, or our brand new office, Perio, where we are getting double-digit lower case acceptance levels than typical. I was attributing it a little bit to the fact that we're new and we don't have like a huge reputation. But the fact that people are talking about it, that does kind of line up with what some other people are saying about case acceptance. People spending less money per case. So I'm seeing it in a few locations.
Jag, what do things look like on the West Coast?
I think January and February we were down compared to last January and February in visits. Our collection per visit, dollar per visit's gone up, and in March and April we saw a reverse. We actually outperformed last year. So what I will tell you, I still practice surgery. Patients aren't signing up for the bigger cases. They're either delaying it or signing up for the smaller cases. We just maybe an hour ago found out that there was a lab in town that shut down. I'm sure there's extended circumstances for that. But overall, we're starting to see a little bit of an upward trend. But January and February were pretty scary.
Interesting. Dan, how about you?
We've seen things pretty steady. We've noticed maybe we're doing a little bit more financing than we did before. So our group, our front, at least our office managers were never really proficient at financing. You'd think something really basic, especially when you get into larger cases. But I've noticed in actually the last couple of months, we brought on a couple other financing tools for the front desk, and so we're gaining less cash up front. It's all coming through marketing. I guess ultimately we're paying for it through financing, but it's keeping our growth steady. So we're probably 2.5% above what we budgeted. So we're happy with it so far.
Steve?
Yeah, I mean, we're off to a great start. So we're seeing double-digit growth so far this year, but I think it's less of an attestament to the patient volume. I think patient volume's up slightly, but I think we're getting better at process discipline in terms of what we're focused on. So on patient recall, I mean, we're hyper focused on training our office managers and supporting our teams to keep the schedules full. And it's really just that process discipline and execution, I think, is better this year than it was the prior year. On case acceptance, we're looking at different technology right now to help with that. And we've also onboarded a couple new doctors recently that are driving higher case acceptance numbers than the previous incumbents. So I think it kind of comes down to like a mixture of people and processes that are really propelling things for us so far in Q1.
Mark, what are you seeing in New Jersey and Staten Island?
Well, where we are is very blue collar: cops, firemen, nurses, school teachers. So the first few months after the new year, they have all new insurance monies. So usually pretty steady for those first few months. It's as they start exhausting those insurance benefits is when we need to start working a little harder to get them to do the case acceptance. As far as big cases and stuff, I do a lot of the all on fours, all on X's. My partner Anthony and does a lot of those veneer cases. We feel like when they come to us, they're already seeking it. So if you want to use the word sell, it's an easy sell. We don't advertise a lot, so we don't feel that as much. Like we're not going out and trying to get those patients. Or when they're coming here and they're sitting in my chair, they're already committed. It's just a matter of getting them comfortable with me to move to the next step. But as far as our growth, it's pretty consistent because of those insurance benefits.
Great. Well, Steve, why don't we start this next one off with you, because you kind of talked a little bit about how you're hyper-focused on patient recall, and you've got some docs that are performing really well when it comes to treatment acceptance. So the question was, again, really pretty general question, but what are you doing to get more patients in the door, and how do you keep the patients you have? So why don't you talk a little bit about, what you're so hyper-focused on?
Yeah. Well, yeah, I think it's a process of keeping the patients. So we're starting there in terms of getting our patients to come back. And we've been able to do that with process and focus and pulling patients up. So if we have an opening in the schedule tomorrow, all of a sudden, and then there's someone booked in 3 weeks, we do a good job of moving those patients up and getting the schedule filled later. I think what it's coming down to is a little bit better access to data at the practice level. So we've invested in some new technology. We're developing kind of a proprietary analytical tool for all of our offices, which gives our office managers real-time data. Now we're going to grow into this, but we kind of imagine a world where we can tee up a list of patients to these offices and say, this is the next person to call based on their likelihood to book. So we're starting at getting really aggressive at booking current patients. As far as finding new patients, I mean, I continue to think that there's no better replacement for word of mouth. So create a great patient experience in your dental office. That's how you're going to get the most amount of new patients. But there are a number of things changing on the technology front and with AI and how people are searching for providers. We're running some experiments now. I don't really have any secrets to reveal yet, but I'm hoping soon with a number of these pilots that we might unlock some things that will work there. But I'm sure everyone can attest the searching for a dentist online is different than what it was like, last week. So it's just the world's changing. We're just trying to keep up.
Yeah, great point. Dan shaking his head, yes.
Yeah, it's just you nailed it as far as the whole referral thing. We had a team meeting with our doctors last week and the office managers, and I said, well, we're talking about cost of acquisition of patients, and we can rattle off numbers. So we can do direct mail, and we can pull a 3% or a 5%. We say what's it's a home run, or we can do Google Pixel ads, or we can do Facebook ads. But bottom line is your acquisition costs are never going to be as cheap as that referral. And we've been trying to spend a little more time making sure we're getting good reviews when we have an opportunity, when we deliver good care, that we get at least rewarded for giving good care and that people acknowledge it. And so it's kind of a social referral, and then we get the referrals from patients. But we've been doing exactly that same thing, Steve, is just targeting our patients to say what they like about coming in.
And Jag, at Mosaic, I know we've got Ryan here, so maybe he can talk a little bit about it from the marketing side of things. But
Yeah, I mean, you don't want a surgeon talking about marketing, so might as well let him. Go for it, Ryan.
Sure. I'd say probably the biggest thing we focused on is reducing the friction to make an appointment. So as Steve was saying, like, hey, finding new patients or booking the appointment, it's just different. AI, the way the world's changing. So for us, we're focused on the online scheduler right now and putting in some AI solutions to get existing patients back on the books. So we're able to get the intel with, if we reduce the friction, set the schedules up right, can work with the offices to do that. We're scooping up, and office is doing it well with an online scheduler. I looked at it this morning, 29 new patients per office is what we're scooping up there. We can see that about 50% of those are coming in after hours. So having some AI tech to support that, and then running AI tech to go against existing patients for reactivation. But the new patients, I always tell everybody, it's interesting, right? Because new patients are really just another dentist patients. And typically the way we're going to get them is you reduce the friction and make sure we can get them in 72 hours or less. And that's really the trick when it comes down to getting new patients. Whether your tactics, Google, Facebook, other stuff, that's just where's the best place to spend the money. And do we hire the right vendors or the right people to do it? But if you can't get them in 72 hours or less, forget it. They're going to go somewhere else.
anybody else want to try this one? Dr. Burch, Dr. Patel?
Sure, I can chime in. The biggest focus that we have in my practice is hygiene reappointment rate. So we try to keep that above 94%. And that reduces the amount of new patients that we need. We also use a Recall Max or Max Assist, I think is what they call it now. That's used throughout the organization. But the money spent on newer facilities, upgrading facilities, and then changing location to better locations with more visibility has probably been the biggest gain this year. And then partnering doctors has increased the amount of of goodwill in the practice. So we're seeing a really significant amount of word of mouth referrals, and because we don't need a whole lot of patients, things have been pretty steady.
Dr. Patel, maybe we can even switch this one up a little bit, kind of leads
Yeah.
into the next question. We always seem to have buzzwords in this industry. Every year, you kind of hear different things, and it seems like same store sales growth, right? Organic growth is one of the buzzwords we've heard for the past 2 or 3 years, right? When you couldn't necessarily acquire growth anymore, you had to focus on same store. Is that still a strategy, or is that the main strategy, or are you looking at acquisitional growth now? Have things changed a little bit in this year?
Yeah, so we've done a little bit of everything. We've done some de novo, some mergers, acquisitions, and over the last year, I would say our same sort of growth strategy is all we kind of focus on, right? We might take on an acquisition here and there, but if you do it tastefully and intentionally for same store growth, your EBITDA impact is a lot higher without all the debt of buying a practice as an acquisition and or doing a de novo, which takes a couple of years to ramp up. So for us, is being really intentional about same store growth. I mentioned it earlier. We got really disciplined in our P&L and looking at that first and what we can do to add tangible top line revenue that doesn't cost anything more than fixed costs that drives a higher EBITDA growth, right? So 10% top line revenue can drop down 40% extra on EBITDA sometimes, right? Based on what the product or service line is. So for us, it's been really just focused on same store growth and any technology or anything that leads to that. And that's where we've had substantial growth, honestly.
Jag, I know you've got to jump off in a couple of minutes, so I'll let you take this one. What's your focus this year?
Just along with Dipesh, similar organic growth is the big focus. I have been starting to look at a couple acquisitions, but really being hyper selective. The other area is cost, right? Labor's gone up, hygiene per hour rates have gone up. Supply, you have, obviously Henry Schein, Patterson, those types, but actually putting them and allowing them to compete with others. Labs is another area of focus. There's thousands of labs out there. There's some mammoths and some small mom and pop shops. So, when you're a certain size, you can go to different labs and negotiate better rates, better terms and things like that. I think, everyone's on the AI bandwagon. My son, he's got his master's in machine learning. A lot of this is not necessarily AI, it's just automation. And so I think using that automation in the right area, for example, RCM functionality, now you could save maybe on some labor costs. And growing top line 10, 15%, could be harder depending on the operational processes you have out there, but controlling those costs can be a lot easier. So trying to balance both of those and get back to M&A with the right practices.
Great, thank you. Dr. Ruggeri, you talked about you had practices in Staten Island, and then you've got some now in New Jersey. Were those acquisitions, the New Jersey practices?
No, we did everything de novo. We would evaluate these offices, and we did everything ourselves. So we felt like we've evaluated hundreds and hundreds, and we're like, at the end of the day, we're going to spend all that money. We'll just open up next door and do a better product, and wait the extra year or two, and then slowly they all grew. Just last year, we're 1 year in, was our first acquisition. And it's going well. Big learning curve, never did it before. But it's going well now. It was tough though. It was tough.
And what's, as far as same store growth, you hear that a lot. When we talk about that, what are you adding specialty? Are you just trying to gain treatment acceptance? When we talk about that, it can cover a lot of different things.
So for us in Oakwood right now, we're just trying to focus on the business aspect. We grew really, really fast. And like I said, it's just three guys trying to figure this out. So we really weren't in the analytical world. We don't have MBAs. We're not accountants. So we spent the better part, and Frank Sema was our COO. I think he's on here. He helped us. He's since moved back to Henry Schein. He helped us. We changed programs. We went from enterprise to Denticon. We changed accountants. We changed bookkeeper. We changed phone systems, all within 3 months. So now the dust is just settling. So we're just focusing now on ourselves, truly understanding what you guys are talking about. Same store growth and how to do all this, understanding the analytics. We're just, like I said, just three guys trying it, all self-funded, a little bit of bank money. But now we're getting sophisticated as businessmen, getting sophisticated as owners, and we can start to push forward so we can be at some of your guys' levels.
Transitioning from a group of practices to a group practice.
Yeah.
So, but everybody's kind of touched on it here, so I think it's probably a great time to segue into technology, because it seems like it's a focus for a lot of people, and it also can be extremely confusing. And Jag talked about AI versus automation, like what's true AI, and do you need that, or do you need automation, or what do you need? And it's moving so quickly. It really is hard to keep up with it. Steve talked about that. It's like, oh, okay, people are they Googling us anymore? Are they going into chat? And how do we get found in chat or Claude, or how does that all work? So it's really tough to keep up with it all. Dan, why don't we start with you? From a technology perspective, AI seems to be, again, we talked about buzzwords. AI is another buzzword that we see here with same store growth. What are you evaluating? What are you using right now that's working? And then are there some things that you're evaluating or looking at maybe to add in?
We're always looking to add in. I love the next toy like everyone else. I want to see what's out there, what can maybe make things better, easier, faster, whatever. Things we've done. We've had Overjet for probably almost 2.5 years. So prior to its integration with Denticon, we brought it in. I just liked it because I saw it being used in other fields in medicine, and I said, "Hey, there's got to be an application in dentistry." And it paid off because initially our clinicians kind of they weren't in favor of it, and when I pulled them late last year, I asked like, who wants to get rid of it? And nobody wanted to get rid of it because they all said, "Hey, it does make my day easier. I get into a room, I get up to date." So that's something that we've been using. We've been using. We use Solution Reach right now. We started with Solution Reach 7 years ago. We've tried Weave, Revenue Well, Legwork, a kind of a combination of stuff, Denticon, internal software, and we're back at Solution Reach again. So we're not afraid to go back if we find that we had a solution that worked and maybe the other stuff wasn't good. But we're big on piloting right now. We're doing Hello Annie, which is a Hello Annie AI answering system. I know that you guys mentioned, or one of you guys had mentioned, using automation to answer calls. And what frustrates me is we monitor our call rate, answer rate, right? And then when you see a 60% call rate answer, and even though some were outside of business hours, that says 40% of the people were trying to reach us, and nobody answered. So yeah, it'd be great to have someone working 24/7, but offshoring that to India didn't seem like a good idea, or to another country where we could get inexpensive offshoring. We kind of like this automated system, and it's come so far that although it may be buzz, the technology is really good, and the fact that you can have a conversation with technology and make it work, to me, is amazing. And we're able to actually schedule patients through it, so that's what's been good. So that's probably the biggest pilot we have is really through Hello Annie and phone answers.
Excellent. Steve, I want to ask you this. This was another question that came in, which was, and you mentioned it earlier, where you're actually building, and I think in like your own custom analytics, right? So there was a question that came in. Are you using something off the shelf? This was in relation to AI, but it could really be for anything. Or are you developing something internally? And it sounds like you're developing at least this analytics platform internally. And why so? Was there nothing off the shelf that suited you, or?
Yeah, it was an interesting strategic choice. So I think we got an introduction to a developer, and originally we were going to have him just aggregate some of our financial reports so we could get it done, much more easily because we were on a number of different practice management software. So it evolved from there, and just with how fast AI is changing, we've partnered with him. He's brought on a couple other developers, and we're developing a full-on technology solution with him. And it's at a point now, if you can imagine it, you can create it. And there's with vibe coding and building all these different AI solutions, he's just able to turn around things so much more quickly, and it has become kind of a core member of the team. And it's really branched out to, hey, we think that this is something that's going to help our DSO. This is going to be valuable for other DSOs. So it's evolving to a company within a company. So the answer to your question is, yeah, we are developing it internally. Sort of happened organically, but then on the other front, on different AI solutions, we're looking at voice AI, diagnostic AI, all those things off the shelf. We are continuing to look at and pilot, and it's an amazing time in the dental industry. I've been in dental for almost 25 years, and this is, seeing what's happening kind of in the world, but how that's translating into running a more efficient dental practice. It's going to be amazing to watch. And what we're able to do and the access to data is remarkable. So yeah, we're developing it internally with the help of a couple developers, and stay tuned. Hopefully we'll launch something soon.
Sticking with technology, we've got three doctors here. So let's talk about any clinical technology that you might be leveraging. Dr. Burch, why don't we start with you? Anything new?
I'm not that impressed by any of the clinical technology that's available as far as AI goes. Is that what you mean from an AI standpoint, or from just a general
Well, it could
text?
be in-house, whether you're doing crowns or, aligners or, whatever.
Well, I mean, we're mostly a perio, or we're about half of us is a perio practice, so we have to stay on the leading edge of technology with a full digital stack. Um, but the majority of my efforts that I'm making are into the AI section my of my my C-suite. So that's where I think most of the technology that we're focusing on. I mean, we do print things and we do all the things that are out there in the clinical space, but I think the main thing that we're doing differently is that we're creating our own stack of AI technology, through Claude Cowork, Claude Code, and then we're putting in an integration layer directly into Open Dental and QuickBooks, through a Caragon HIPAA compliance and Zapier, and that helps us create bots for the C-suite. So the all of our energy is getting focused into that as far as all expendable efforts. As far as clinical goes, I think what we're currently doing we usually have a C schedule, and basically updating 16 offices to the bleeding edge dentistry is what I'm trying to do. So making sure we have cone beams in every facility, making sure we have wellness exams and scans in every patient. Those type of technologies are what we're looking for, but I'm looking for things that are actually going to move the needle significantly. And I really don't see the AI technology that's in clinical as really any significant clinical use, because I think it makes small cavities, or when you already look for small cavities, it just helps you find slightly smaller ones. And if you already educate gum disease, it usually our hygienists are the ones that are the educators, so we really don't have to use it for that. So I think anything off the shelf is mostly a waste of my time when it comes to clinically and when it comes to the organization. And there's no reason why, if we're building something for the future, if we are the top groups in the country, I'm just going to build everything.
Love it. Dr. Patel.
Yeah, I'm gonna take a different approach. I don't have the sophistication of Jeff to build it yet. I do agree with kind of what he's saying, but in our current state, we are using Pearl AI clinically. I know Overjet, Pearl Videa, there's a lot of them. They all kind of do the same thing. It does help our younger doctor base get there a little bit quicker. We are bullish on, there's an analytics company called Clarify Health that Elliot Seibel runs that should come to market soon. We are bullish on that company, and not just because analytics are analytics, but you got to know what to do with the analytics. And he's taken it one kind of step further, where it's getting into the hands of the providers to make actionable steps for the actual patients that are on their list, right? So one thing we always found is you could have dashboard after dashboard, but to get it from the hands of the C-suite down to the people that actually make all the action items, which is your hygienists, your assistants, your front end, your doctors, there's always a gap between that. So they're kind of building some technology that hands it to the actual end user to go, here's your list of patients. Here's what you could be missing. Here's what you have missing based on AI and everything else. So I find that pretty cool. And we use some phone AI. I know you didn't ask about that. We use some phone AI that answers after hours, overflow calls, helps your front teams, marketing teams out as far as cost of acquisition. But the last one, which I'm not sold on any company, so I won't mention any names, but there is a lot of voice recording AI that I am bullish on for the clinical part. Not necessarily just for perio charting or writing notes. It's more ambient listening in the room where they can give clinicians feedback of, you forgot to ask about their chief concern, right? The thing that they actually came in for. To give these younger doctors, hygienists, younger providers instant feedback to go, here's coaching, 101 without me there telling you, you should probably do this because your patients are looking for it. I think the one that kind of figures that out cleanly is going to be a great coaching solution, and we'll be kind of bullish on that company. A lot of them are kind of tinkering with it. We were early adopters in a lot of AI, and now we're slowing down on purpose because what we're trying to see is a consolidation of AI starting to happen, and companies are purchasing companies. So we're kind of just now sitting back to go, which one is just going to stack it on top of something that already exists instead of having 7 different companies trying to do one product each.
Yep. Yeah, great point.
Bill, can I jump in with a follow-up question for Dr. Patel?
Yes.
Yeah. So yeah, I'm interested in that space too, on the ambient listening. And you as a provider, I'm just like, what's the feedback from your team on if you're going to pursue that? Because you worry about Big Brother is listening. I mean, what's your view on that?
Yeah, I think for us, our doctors are kind of ready for it, but that's also kind of the DNA of our organization, how we recruit, right? Our model is we want the 1%ers, which is constant personal growth for us, right? So when you join our organization, we said we're going to constantly coach you to get better because we want you to get better. And 1%ers always want to get better. So when you have that as an entry point of clinicians coming in, then when you start layering on some feedback mechanisms, like the ambient listening, then they kind of take up to it because I pretty much tell them either that AI is going to listen, give you instant feedback, or me and my chief dental officer, dental director are going to listen to give you that feedback. We just can't give it as quick, right? So because we can't be everywhere at once. Because the culture is already there for us, I'm bullish on it. If you don't have that, then you're absolutely right, and no one's going to want Big Brother looking over it. But we did that with scanners before, right? So we have scanners across the board, CTs across the board, and we told them, you scan, just know we have access to scanners. We're going to get feedback from the labs, and we're going to look at the scan to make sure your quality is great, right? Because at the end of the day, our job is to serve the patients, and whether that is clinical care or emotional care or verbalizing care to the patient, we have to be good at both in order for the patient to want that clinical care. So we're going to push it one way or another. And if you don't fit that, then unfortunately, you won't probably belong in an organization and maybe somewhere else.
Dr. Ruggeri?
Yeah, we dabbling in the AI as well. We have Pearl AI, and I was against it at first. mainly because of the cost at first. But then I'll see it being used with the young doctors, and it just, whether you use it or not, it's visual. And as soon as you tell patients it's AI, that means it's gold. And it opens up the communication with a young doctor who has trouble. You know, some people are blessed, they can just talk to a patient and they accept everything. And then you'll watch some of these younger doctors struggle through that initial exam and trying to tell them what they need, what they don't need, and they'll under treatment plan because they're nervous, they're gonna, scare them away or whatever. The AI just helps them real time give them some validity in what they're talking about. So my partners have changed my mind on that. And I see if you use it just the right way, it can open up doors for these younger doctors and give them the confidence they need because everybody's looking at it at the same time.
Hey, Ryan, you've got the marketing hat on as well. Any technology that you're using? You talked a little bit about a scheduler that's worked out really well. Anything else that you're using?
Yeah, I mean, there's a couple, and well, uh, two sides there, right? Is always keep in mind what the team's talking about here is the patient experience is what ultimately matters at the end of the day. It's what I mentioned earlier, which is reducing the friction. So that's part of it. The other part of it is the data, so we can make the decisions on that. And then we have office team members. And I agree with what Dr. Patel was saying is, hey, we want to make their life easier, but also, if they can't get on board the technology, might not be the right home for you. Or what I kind of say is you might have the wrong people in the seats. But to answer your question, with all that in mind, first in is the online schedule we're using. They have some really good integrations with Google and things like that. That helps us get the patients on the book, but it's really their detail and their understanding of scheduling and how unique it can be to an office, even if you're following something like a harmonized scheduling platform, which we do. We use Pure Logic to get our data insights. We're using Resonate AI to help us get the existing patients on the books. I'm not a clinician, but we use Vidya AI. And I think Dr. Ackerman and Dr. Austin are doing a great job with it, showing that that's making a positive impact in the organization. But all of it comes down to, again, is that patient experience and is the foundation there. So as we grow, whether we buy offices or just grow internally, that it can scale with us. And that's really the whole key for us is that we can scale with it, make sure it's working. No vendor's perfect. We got to do our part to make sure it's successful as well. And we've had some good successes with those vendors that I've mentioned to you.
Excellent. Got a couple questions that came in here. I think we should this is an anonymous attendee, so we don't know who it is, but there are two of them. I don't know if it's from the same person or not. The first one is this a good time for buying practices? The economy seems shaky and interest rates are high. And then I think it's kind of tied into that is also, well, why don't we start with that one? Anybody have any feedback on buying practices right now? I think one thing that I've seen, we did a poll recently. We're asking a little bit about acquisitions, and I think one of the top things that the DSOs responded with was biggest challenge right now is that dentists' expectations of the value of their practices are not in line with reality. That seemed to be like at the top, and there were some other things, interest rates, but that actually kind of I think was much higher. It was like almost I think it was like 50% of the people that answered said that it was that. Any feedback on that? Are you still in acquisition mode? Is it more thoughtful? Is it slowed down? And I know Dr. Ruggeri talked a little bit about got one under his belt, big learning experience, but actually knows how to do de novos. And some people it's the opposite, really good at acquisitions, de novos they struggle with. But why don't I start with you, Dr. Patel?
Yeah, I agree with whatever that DSO leader was saying. We're kind of seeing the same thing. What the sellers think it's worth and what the market really says is worth. There's a big misalignment that we're seeing in the acquisition space right now, especially for single practices kind of going to market. They're still following that 70 to 100% of collections model, whereas the DSO market follows a multiple of EBITDA model. So because of you take $1 million practice in the Atlanta area, they might be trying to sell it for 800 to $1 million in that range. But I've seen some that may do 1 million with $0 of EBITDA, right? And they still want 800,000 to 1 million for it. And I think the sellers and the brokers in alignment have to realize that profitability does matter, EBITDA does matter. That top number isn't the only thing that matters anymore, especially with interest rates higher. So as interest rates started rising, DSOs are getting a little bit more sophisticated in what they're purchasing because they have to potentially hold it and operate it and learn to create EBITDA arbitrage in it. So I agree. We're kind of on the sidelines a little bit right now because most of what the sellers still want is a little bit on the inflated side. And I'm hearing there's not, in our market, I'm hearing there's not as many buyers being as aggressive as they were. So I do see it coming down at some point in time as the industry as a whole gets a little bit more sophisticated in terms of financially.
Jeff, let me throw a different question at you. This is another one that just came in. How do I know if I'm doing well? What metrics should be checked and what's the range I should fall into? So how do you what KPIs are you looking at in order to measure your success?
There's really three that I look at, and they're pretty simple. One is top line revenue. So you can't build profitability that doesn't produce something. Hygiene reappointment rate is the number one KPI when it comes to patient experience. Okay, so I think you need to have a lot of revenue coming in. I think you have to have patients that keep coming back over and over and over and over and over that recommend other patients. So if that 91% is what dental intel says is the top 10% of all dental intel practices. So 94 is what typically we shoot for, and 98 for perio. So, and then the final one is the bottom line. No, making money. So everything else can be filled in between that. And you can go down any rabbit hole you want. You can go down the AI rabbit hole, you can do whatever, but making money and making things cheaper and increasing revenue is really what matters. And making sure that you have a business that keeps on continuing, that isn't dependent on necessarily on the provider always being there, the doctor, and then retaining I guess the other one would be retaining your doctors and your hygienists. So high retention of high quality core value fits. So I think if you do all that, I would focus all my energy on those things. And then if I had a tiny bit of energy left over, I would focus on all the bells and whistles that everybody else wants to do. But people just don't do the basics right. They don't do the basics right, and they try to skip over 7 or 8 different technologies when they don't even know how to read their own data. Or even, some people have just started getting data. So you don't even need to track it if you have a good company up until about 30 million. So anything under 30 million, you can obsess about without even having really budgets if you're really crazy about it. So from a practice standpoint, making sure patients come back, focus on your patient experience, make sure that you have top line revenue so that way you can tinker with it on a business side so that way you can have good bottom line revenue.
Excellent. Dan, any insight there?
Well, actually, regarding a good time to buy practices, I think it's a bad time to acquire for acquisition's sake. I think it's like anything else, right? And I'm probably the oldest of the panelists here, at least vying for the oldest. There's a good time to buy real estate. I'm a finance guy too, so I even look at it a little different. There's a good time to buy housing. Is it a good time to buy a house now? Well, you can make an argument. Sure it is. Interest rates are up. Who cares? They're not 20%, and you have to negotiate a better value. And so Dipesh had nailed it, is that you may not pay as much as someone wants to sell it for, but the part of acquiring a practice, if you finance some of it or all of it, you can always refinance down the road, the same as they're going to tell you about a real estate loan. And if you get the right practice, you can get yourself revenues really quickly. Now, if you buy it just for acquisition's sake and it doesn't mesh with the other offices you have, well, then you've got a problem, right? So you never want to just buy because it was cheap or it was a good deal. Because trust me, we've seen a ton of those. We'd have 150 offices that I wrote if we wrote every deal we saw. But that being the case, if you can find one that philosophically they align with you and that you have a good culture, absolutely. I think you buy and you pay a fair market rate and you go out and get financing and you make it part of your own. So
Can I add to this question here? I think it's a really great market for doctors that want a great job, that want to buy a practice. And I think the practices are cheap. When it comes to DSO pricing, it's high because DSOs can't improve the practice. If you can improve the practice, and if you never should buy anything you can't improve. And if you can't improve margin, everything's going to be expensive. These rates are like not crazy. Like most people's lives that are over 50 have seen 7% for like half of their lives. It's not that bad. This is all like media bullshit. So finding good practices with good deals with good doctors. If you're in the business of arbitrage, you're up shit's creek, because you're just attaching things onto an already, you know, chaotic organization or unscalable. So I think there's tons of opportunity for acquisition. Just you got to be able to work on your own practice, to figure it out first.
Thanks, Jeff. Yeah, I think well, there's a lot we could go. I wish we had another hour, but we will actually when we're in Chicago. So we'll focus on was we talked we spent about 10 seconds on doctor acquisition and doctor retention and that whole thing with staffing that still continues on, right, with hygienists. So I'd love to focus on that while we're in Chicago. We've got 3 minutes left. So get some final thoughts from everybody. And since we probably have a good chunk of vendors on this listening in, I'd love to get your feedback from perspective of what are your expectations from a vendor? Because a lot of times we see vendors that come in with, a good solution. So the product is solid, but the support isn't necessarily there. And I think this is something we see time and time again. And of course, you definitely need that as well. So, Dr. Ruggeri, talk a little bit about, your expectations from vendors and, maybe any tips that you can give them. How do they work with a group practice?
So again, we're growing. We're not as up as some of you other guys, but my expectation for the vendors, and we're with Henry Schein. We cut some good deals with Henry Schein. Is I don't want to watch every single minute, where they give you a good deal on cement, but then they're raising up the prices on other little things that you're not paying attention to. Like, I feel it's a partnership, and together we can grow. So I hate having to, go back and really I have so many other things to do, and I don't have the dollars and cents to hire somebody just to watch procurement. So that's my expectation, is that with partners, don't mess with stuff.
And you're all still there. I just wanted to put this up to actually make sure I thank Henry Schein One for sponsoring this. Dan, how about you? Because you actually were on the other side of things. So you were a vendor a while back.
yeah, I think it's important to understand your value proposition if you're a vendor and be able to clearly articulate that and understand that I don't know about you guys, but there's not a day goes by I don't delete 80 to 100 emails of just stuff, right? Anything from just junk. It's just financing equipment they can't restate a value quick enough to get my attention, so I delete them. But I think if you're a vendor, you've got to understand the value proposition, how you fit in, and what you're going to do that really disrupts what day-to-day practice is for us or our day-to-day life, and improving it. Obviously, not disrupt it in a negative way. And that's probably the best advice, because you only get 30 seconds with someone sometimes, and you have to make your mark quickly.
Well, thanks, Dan. And we are almost at 4 o'clock Eastern. So what I'll just do is thank everybody for all the emerging dental groups to watch award winners for being on the webinar. You'll get a chance to meet them and hear from them. We're going to do a panel discussion. Also, they'll get their awards in Chicago. That is at the ADSO Summit. It's the Hyatt Regency. Our actually awards will be on June 15th, but you can come to our website and find out the details there. But thank you all. Really appreciate you joining, and thanks to Henry Schein One for sponsoring this webinar. We'll see everybody in a little over a month in Chicago.
All right.
Thanks, Bill.
Thank you.
Thanks, guys.
Thank you.
Thanks,
Thank
guys.
you.